Hey guys, good afternoon. This is Julie. We're going to do an aftermarket video. This is NQ. Had some great price action today, and not so great, rip your face off type of price action. Right off the open, we had this huge rally breaking the monthly one and hitting that weekly one and breaking it momentarily, and then it fell back to the monthly one and crashed all the way through it. So there was a huge push down by the dealer off of these levels. Here's a weekly one and a monthly one. And then the market consolidated and made another attempt for it, was able to get back up to that weekly one, but could not break through, and came back and started resting again on this monthly one. So if you know your bell curve, there's an A and a B, above and below. So this is the one below and that's the one above. So inside this area here is your first standard deviation of the monthly level. The month expires tomorrow, and the dealer not allowing price to go back inside means that they've already moved their risk, right? They've moved their risk and they're not allowing price to go back inside. So that means that they're sitting on this level, blocking it. But I think there's more to it than just the monthly. And I will show you. Here is another example of that monthly, but here is the quarterly. And you can see that this is the reason that they won't let it go back inside. It's the quarterly level. So you have several quarterly levels all sitting here, a 3 month, a 90-day, and a 12-week, sitting all right here. So these quarterly levels are what is holding the money. These are high institutional levels. Um, and we have a month end tomorrow, but we also are sitting on quarterly resistance. So until this breaks this quarterly level, I kept telling everyone there's higher time frames involved. So really, until you clear this 14,450, 14,460 area, don't even think about going long. Um, Wait till the resistance clears is my advice, whether you follow it or not. But I can say that that is a quarterly higher time frame level, and the monthly. So I'm not so worried about the weekly. Even though we rested on the weekly, it's the quarterly levels that they were protecting. And bringing it underneath the monthly, they've probably moved their risk on that monthly expiry too for tomorrow. So we will see. Might get that close below here, and then the level could open up after tomorrow. Now, again, if it breaks, I mean, ranges do break. If they do manage to break above it, then absolutely, Santa Claus is here. I mean, I got really excited in the morning and thought Santa was coming because of the degree that that broke to the upside was so strong that it almost took everyone's breath away when we got our faces ripped off our face. I mean, literally just took it all back and more, and then just drifted up, sort of drifted up. Very, very typical. So what do we have for our week ending? I love my 7-day threes and my 8-day ones. My 7-day threes are going to be blocking the move from going down. So we're not going to go too far, is what I'm trying to say. 14,289 and 14,249. You got your 7-day threes. If they do manage to get below that, then we can come down to that 8-day one at 14,080. But those 7-day threes are right there, 14,249. So that's, right in the middle of the weekly distribution. So keep your, eye on that. Um, and that's just your daily one. You can see that we stayed inside the daily range. For the VIX, the VIX was crushed. Vol crushers came in. Pretty much the entire session was below the current open. And just, a very hard session to trade. We were at 20 and now we are down to 1975. So for our 23, 30, 37-day distribution, which, largely contains price, the VIX, these are first standard deviations for this. And you can see that they did get it below the 23-day one. We did not get above the 30, but it was trying, to get up to the 30, but now we're back below the 23. First stop would be the 37. Okay, so we'll just keep an eye on this. Quarterly is controlling the risk as much as that monthly, in my opinion. Okay, y'all be careful, and we will see you tomorrow in the morning chart review for the other markets.